Yo, what's up, guys? This is your boy once again, Sage Tino. It's been a while. It's been a while, but your boy is back. He's back. He's back. Let's get to work. Okay, yeah. So what I'm bringing you now is more focused on currencies, strictly currencies. That's more of the content that I'll actually be giving you. On trading deriv, I'll only share information as per requests that will actually come from you, but mostly the content that I'm going to be sharing on this channel onwards will be focusing on currencies for the simple reasons currencies are quite consistent and they're good for me. It's a personal choice that I made, but then if there's content that you want me to share on this channel pertaining synthetic indices, trading on deriv, then I can share that information with you guys, right? Yeah, so on our channel I actually changed the name to Weeks Pay My Bills, right? Because there is a methodology that I actually want to share with you guys, that I want to focus on this channel, mostly directed to currency trading, right? So I'm back, still parcel of Stylz-pips Forex Empire. So if you actually want to learn on anything of how we teach and trade more with us, you just come straight to Stylz-pips Forex Empire, right? But on this channel I'll be uploading content, my personal content, that I believe will actually help other traders out there, right? So let's get to learn, and let's get to explain much about this thing, Weeks Pay My Bills. Our bills are going to be get paid by trading weeks on currencies, right? But before we actually get deeper into the concepts that I'll bring on this channel, right, I'll go back a little bit and talk about our reversals, and something that I've been asked by many people. I've been seeing people in our WhatsApp platforms, people asking me to explain what Choch is, what's the difference with BMS and stuff, right? So I just thought it to myself to start from there, then take it forward to other beautiful concepts that I'll actually bring to you, or clarify on some concepts that I taught previously on the previous lessons, right? Okay, so okay, I've opened on NZD card, right? So just do an analysis, or I'll explain from this chart. All right, this is on daily time frame, right? Our market is fractal, we all know that. So you know, I can just use from where we are, right? And we're seeing there is a reversal there, right? So from the history there, we can actually tell there is an uptrend that was actually in play there, creating higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and the market is going like that, right? So I think if we can actually start from this point, it will be very nice for us. So let me just play that on and we get to like, right? So if you come to this point, if you're analyzing, guys, remember what you said, what you want in the forex market. If the market is pushing to the upside, you want to see them breaking the previous high that will have been created there, right? So we'll just be patient to see if price can actually break that previous high, right? Okay, so price started playing out like that, and it managed to break that point, right? So the moment price actually breaks that point, right, it means our extreme zone for that trend is this one, right? Then this will be liquidity. We'll be expecting to take buys from this zone and move upwards, right? We'll be expecting to take buys from this zone and move upwards, right? So what is going to happen is this, right? Let's take it like what many people are going to be doing there, or what we are going to do there, right? So we're going to put something like this, then we're going to be risking this zone, right? Then we wait for a price to come into the zone, then we get to track, right? Let's see, right, if this trade was going to succeed and how would actually act, right? So you wait for your price to actually get into that zone. That's the zone of interest that is actually red, right? Okay, right? So if you look at that very spot, price moved into that zone very fast, right? Price moved into that zone very fast, right? What you want to see is price approaches or gets into your zone of interest, you want to see a confirmation, you want to see a rejection. But if you don't see some rejections and confirmations, we'll talk about that. I've talked about that, but I'll go back to that and explain further, right? So if you don't get a confirmation in that zone of interest, you don't jump into a trade, right? Because you only take a trade after some confirmation, right? So the moment you don't see a confirmation, then that trade is not valid. The moment price starts to play below this zone, right, you don't take any trade. So it means your bias is going to change, right? So in this case, you don't take that trade, right? That's the disadvantage of people who actually use limit orders, right? But if you're using instant executions, you'll be safe, right? But if you're using limit orders, then you're going to be hit by such trades because you lose to such trades, right? So what we had seen right at the top there, that was just a BMS, break in market structure. That was at the top there. This was actually a what? This was actually a BMS that we had seen there. I think I explained on the previous videos on what is a BMS and what is a fake BMS in the forex in the forex market. Okay, so we had a BMS there. Then we also see that price now, right? This is previous high that we had created, right? So with what is happening there, we are seeing that price is broken that level, or it's actually breaking that level, right? If you can play there to see if it's a successful break that we actually got on that level, awesome, right? That's a successful break that we actually got from that point, right? But this is the first break of the previous low. The previous low is being violated, the uptrend is being violated, right? We are most likely going to get a reversal, right? So what we say that is change of character, right? The market is now changing its character. So we call that Choch, right? That's Choch, change of character. So that's the name that is given to this move, right? It's not a BMS, right? The first break of a previous high opposing the trend that will be there, we actually call it Choch, right? So the moment we see our Choch, right, we start marking our zones, right? But we will actually want to mark our zones the moment we see that the reversal is already happening, right? So let's play and get to see if the reversal is already happening. You have to be patient with the price. Okay, it's still going down, right? Wait until we see that they are reversing, right? Okay, I think they're pushing upwards, right? So the moment they start pushing upwards, they remember what we taught you in the other lessons. We said you then apply your premium and discount concept, right? So you come on your can box, that's the one that I use. If you can use a Fibonacci, you can still use a Fibonacci, right? So this is there to show you your premium and discount zone, right? 50% zone. So this is your 50%. So anything above, when price moves above that 50% mark, then I can consider myself. Anything below the 50%, so this is a 50% mark. Anything before the equilibrium zone, we are not taking that as our trades, right? So if you are to plot our zones of interest, right, we'll have the extreme zone, right? That extreme zone, it's almost in line with this zone, so you can just mark it as a single zone like this one. Then we'll filter as price gets into that region. Let me put a gray color, right? Or we can do this, but there will be need of moving to shorter time frames so that we see the extreme order block that is at that very zone. Let me just do this for now, right? Then we also have this zone, it's actually above 50% zone, right? So all these zones are actually our supply zones, right? Price can choose to react in those zones, right? So these zones, they are all our supply zones, right? I can choose to label all of them, but let me just label this one only, right? I can choose to label all of them, but these are our supply zone, right? So for the first one, right, I will just start with the first one. What I expect in this zone is I expect my price to actually come, then I risk few pips above that zone. I expect my price to come into this zone. If I get a confirmation, then I'm going to sell in that zone. That will be my first attempt, and I'll be targeting the previous the previous lows, right? The risk reward ratio, I'm risking about 83 pips, targeting 280 pips. Very good risk reward ratio, right? So let's play it and see our price actually acted on that Choch, right? So a Choch trade, it's a risky trade to take when you're trading, right? That's a risky trade because we say that it doesn't have a confirmation, right? Okay, so if you see the price came into that zone, right, and it reacted at least one bar going downwards, right? So join on the next bar, we would actually sell. If you go on lower time frames, I'll explain deep on other videos, right? You will see confirmations within that zone on lower time frames, then you get to trade, right? So let's see how this trade actually got to play out, right? Awesome. This is too much profits, right? This is too much profits, right? Then finally they took our TP. Oh, it was delaying. Okay, they took our TP there, right? They took our TP. So in this case, our Choch, which happens to be the first zone, right? Our Choch, our corrective move after the Choch, it managed to play out and it paid, right? But what I'll actually want to say, I'll explain at the end of the video, right? So hold on till I get to the end, right? Then I'll explain why the Choches are kind of risky, right? So from here, this trade has been successful, right? After it has been successful, this is what you can do so that you can map up for other trades that can actually come, right? So after the Choch, the next BMS or the second break of structure that you actually see after the Choch, that's what we actually refer to as a BMS. As you know it, a break in market structure, right? And every other supply or demand zones that will come after these ones, right, they will be good to take for your trades, right? They will be good to take for your trades, right? For example, if I'm to take the extreme zone, but I should do this after noting my zones, right? This supply zone, right? I think this trade item, let me just leave it there. Okay, let me play. Right, the moment it starts to correct, then I mark my supply and demand, my premium and discount zones, sorry, right? So you will have to be a little bit patient. Okay, they are now correcting, right? So the moment they start to correct like that, you just do your premium and discount zone, right? So that you see where your equilibrium is. So you put this, right? Then your 50% mark, right? Okay, this is my 50% mark. Then I can safely remove this one. It's done its work, right? So this is my 50% mark. So if this is my 50% mark, you can clearly see that there is no any other supply zone that is actually below this zone, right? This zone, actually, these are bullish order blocks, bullish candlesticks that we are seeing there. Let me remove this one. I think it is done its work. Our first trade was successful, right? This is all right. So they're actually below the 50% mark. So we can't use these for ourselves, right? We have to wait patiently for the upper zones, right? In this case, we can also include this order block, but they're almost in the same zones, right? Okay, so we expect that. So on mapping our trade, this is what we're going to do, right? On currencies, it tends to be a little bit easy, and price respects these zones more often than it is on derivative, right? I don't want to speak anything bad about derivative, but this is from my experience. These concepts, they are more reliable when you're trading currencies, and when it gets to derivative, we'll be trying to force these concepts, right? And it's kind of difficult. Okay, so let's play this out and see. So it was actually forming a reversal there. I think hopefully it doesn't break this low from where it is. Okay, just giving those wicks there, taking more liquidity from those zones. It took time. So in forex trading, when you're trading currencies, you actually have to be patient. Patience matters when it comes to trading currencies. It's unlike derivative where you're actually getting trades every other second. So you actually have to be patient for your price to come into your zone, right? This is work. This is work. So we have to be patient. We have to be patient. And price is in our zone, right? So the moment price gets into the zone, we are now waiting for a confirmation, right? So let me adjust this to this region. right? I think our risk is fine. Then you step down to your lower time frames and look for what? For confirmations, right? Let me just do this, right? You go to your lower time frames now, right? Then you can work out on your confirmations. So it means this one, I can actually ignore it and just focus on this range risk. Then it also reduces like this. Allow me to do this for now, right? So you go on your lower time frames, they're looking for confirmations, right? So you don't end up before the market reverses on lower time frames. You actually go on H1 M50, you are going to get a reversal there, right? You are going to get a Choch on the lower time frames. I'll explain that later on other videos, right? So the moment you get a confirmation on the lower time frames, then you get to strike your trade, right? So in this case, price started rejecting from that zone, I think. Yes, right. I believe there will be confirmation, right? Then if you want to press, then you can actually press after the confirmations. Then you just wait and see if price will respect our zone or will be hit by the trade. Okay, so you have to be patient for targets. So in this case, boom, they hit our target, right? Then after they hit our target, you just have to wait. If they break this low, you do your projection against second BMS and you're trading and you move with your trades like that, right? So basically, this is all that you have to be doing in forex trading. You are looking for Choch, right, for the reversal. You are looking for a BMS, right, after the Choch, where price is going to tell you that we're continuing that trend, right? Then you mark your supply and demand zones. So here I just illustrated with an example for a bearish trend. Maybe I'll do another video where I'll illustrate with a bullish trend, right? Then you get your second trade. So this Choch entry, the first trade that we actually took in this region that happened to be this trade, it's kind of risky. It's kind of risky. Why? Because the trend would have been established yet. The trend wouldn't have been established yet. I had marked it was this trade, right? Because the trend wouldn't have been established yet. The target was actually here, right? The trend wouldn't have been established yet, right? So on this very first trade after the Choch is kind of risky. Then this one will actually refer it to as a confirmed entry because you now know that this is a down trade. So this one is less risky and you take this one with what? With confidence, because already we're in a down trade. We are seeing a BMS. But the first one on the Choch, the first break of a previous high or low is kind of risky. They might just decide to take this low as they're taking liquidity, then they just move to the upside. Right, so all we are trying to say, this is all we are trying to explain. If I can simplify this, let me just do this. If I can simplify this, right, this is all we are trying to say. This is all I'm trying to say. Okay, right, you're going to see this. If you're in an uptrend, trend is moving upside like that, right? Then the moment they break this previous low, right, we call this what? We call this Choch. This is the guy whom we refer to as what? To as Choch. Change of character. This guy, right? So after seeing your Choch, this trade, you can take it, but take it with small risk, right? Or take it knowingly that it can fail because it's the first move against the trend that was there, right? Because at times they might want to take liquidity, then they just move and they continue to create new highs. But the moment they fail to break this high with this move and they respect, start going down, now they've actually formed a lower high on this point, right? And they're going to form lower lows, right? Now when they're coming back there, right, you project your zones after the what? The first BMS. I'm just repeating what I was explaining. This is the first BMS we're going to see there. This is the first BMS, right? Then you're going to mark your supply zone. I don't know, maybe you have another supply zone that is actually in that region, right? This one is supposed to just end there, right? If you have one in that area that I've just placed, then you're going to take your sales from that zone, and the trend continues like that, right? The story continues like that, right? So this one, right, the first supply zone, because we are taking it from a higher high. So the moment we say it's a higher high, right, it actually means that it's risky because it's a high high. We're still in an uptrend, right? So here we say risky entry. If you're going to take an entry from that one, right, it's going to be a risky entry, right? Then this one you can decide to call it a justification or justified. Just let me just say justification entry or a confirmed entry, meaning that it's what? It's less risky. I've put a whole lot of notes on that one, right? Less risky, right? So you take this one in confidence, less risky on the other supply zones that will come thereafter. But this one is more risky. You take this one with extra caution, right? If you're someone who is afraid of taking risks, then this one you can actually leave it out, right? Then you start to trade on this one, right? So this is just the same if you're going to trade bullish trends. It's just the same. It's just the opposite of this. You just do the inverse of this, then you take your trades. But for the benefit of others who want to see the things being explained, right, I'll have to just do it quick, right? In a downtrend, right? So the moment they are going to break that, that's Choch. They come there, risk entry, they push a BMS, confirmed entry, then we go like that, less risky entries, and we go like that, right? So what we are seeing there is here we had our what? We had our Choch. We had our Choch there. Just do it quick. We had our Choch, right? We had our Choch there. Then we had our what? Our PMS there. So this is the PMS, the second break structure that you're going to be seeing. So this is your PMS, right? So this one now is going to be what? It's going to be a risky entry. This one, the first corrective move into the lower low. It's a lower low. It's telling you that we're still in a downtrend. There's a possibility that this move can just continue, right? So it's kind of risky. But when they break for the second time, now we have confirmed that we're now bullish. We're now going upwards, right? So it means the trades that will come thereafter, they are what? They are less risky. These are confirmed or justified entries, less risky. This is where we expect chunk of traders to actually join into the what? Into the trend, right? Usually at the peaks. So these on the Choch entry, we refer them to as peaks, right? So when price is still in peak, right, the market makers or the big guys, they tend to manipulate a lot. So we want traders to fall victim of manipulation that happens in the peaks. But on the second PMS there, it's less risky. You can take your trades there and become profitable, right? Hope you actually enjoyed this session, guys, right? Coming on with new important information on the upcoming videos, right? Hope you liked it. Just do as you're doing back on the other videos, supporting this channel, right? See you on the next session. Thank you for your time, guys.